Adnan, Amber.
Yes, we are live.
We'll wait a few minutes and then let the participants join.
Yaqub, floor is yours. You can start now.
Fawad will start.
Assalamu alaikum. Good evening, everyone. शुरू करते हैं अल्लाह के नाम से बिस्मिल्लाहिर्रहमानिर्रहीम कुल वल्लाहु अहद अल्लाहु समद लम यलिद वलम यूलद वलम यकुल लहु कुफुवन अहद. Today, another series of webinar. My name is Fawad Aftab. I'm a member of the PAIB committee and the CPD committee of ICAP, which is involved in conducting various webinars post-COVID and various webinars on the industries. We have done an earlier webinar on oil and gas sector on the upstream. Today, we are doing a webinar on the downstream sector. Today's webinar, as we all know, that oil sector is a major sector globally. Global impacts, COVID has had a severe impact on this sector. It is the backbone of most of the economies globally. And it would be interesting now as we are going into the recovery phase. COVID hopefully has come to its tail end, a vaccine coming in probably soon. So we are now moving towards the recovery stage. So it would be interesting to hear from the leaders, local leaders, their perspectives, international perspective as well as local perspective on the industry. How is it shaping? What are the challenges it is facing? Before I move further and talk further, firstly, I would like to formally ask Mr. Harun Rasheed to welcome all the panelists, and then I will take it from there. Mr. Khalil.
Yeah, thank you, Fawad. Bismillahirrahmanirrahim. Assalamu alaikum. And very warm welcome to all the participants in today's webinar. Gratitude to all our distinguished panelists and our moderator, Harun Saab, Adil Saab, Shahriyar Saab. Thank you for joining the webinar, sparing time out of your busy schedules. And our very dear Yaqub Saab for moderating today's event. Thank you so much. Oil, as Fawad rightly said, is, we all know, one of the most important sectors. This sector drives and energizes many other sectors of our economy. So it has its significance, we all know, globally, locally. But it's are interesting times for this sector as well. We keep reading different reports of how different technology and other trends are impacting this. I distinctly remember a Stanford report that I read probably a year or so back. We talked about the impact of these renewables, the electric cars, and it was a report about the technology's impacts, including 3D printers and all. So on the oil, I distinctly remember one phrase. It said the oil economies in a couple of decades are heading towards the destiny of dinosaur because of the renewables, the electrical cars, the trends. To what extent this impact has been realized globally and locally, we have a galaxy of speakers to enrich us about it. And similarly, we see, heavy volatility in oil prices. COVID, of course, had its own disruptions on both demand and supply side. Being in aviation and this fuel being one of our important sectors, so we have to continue to watch it. I recall in January, when there was a US and Iran standoff. So I was speaking to Standard Chartered City, London, and talking about oil hedging at that time to hedge against the upward trend. And then a few months later, the oil dipped and we were all trying to hedge the lowest levels, right? So it's interesting times in this sector, and like all of you, I'm really looking forward to listening the expert views of enriching ourselves of what's happening in this sector, how these trends are impacting them. So with this, I won't take much time. For WhatsApp, over to you. And again, a very warm welcome to all the participants.
Thank you very much, Khalil, for your warm welcome to everyone. Your continuous support and advice has been instrumental in making these successful webinars across different industries. Moving to the oil and gas sector webinar, we are quite honored today that we have a very august panel who have agreed to join us. Let me take a few minutes before I hand over the mic to the moderator. We are joined today by Mr. Adil Khattak, who is the CEO of Attak Refinery. Mr. Adil Khattak has a 44 plus years experience of the oil sector. Amazing. And Mr. Adil Khattak is an engineer by profession. He is on the board of directors of Attak, many other organizations of Attak, Attak Hospital, Attak Power Gen, and he is also on the board of several institutes, as well as on the board of governors of LUMS and other GIK and other institutes, and a lot of social services that he does. So we are honored to have you here, sir, with us today, speaking to our professionals. On the panel, we also have Mr. Harun Rasheed, another amazing. He's the country head and managing director of Shell. 25 plus years of experience. He started his career. He did his MBA from LUMS, and he joined in 1995. He joined Shell. In 2001, he did his MBA from INSEAD, and he carries a working experience internationally. He's worked in Singapore, he's worked in Pakistan, he's worked in Europe, and in Shell, and he has a lot of experience in oil marketing and distribution and related businesses. Again, we have welcome Mr. Harun Rasheed, and thank you for honoring us today. We have with us Mr. Shehryar Umar, who works for one of the largest oil refineries and a local household name, PSO. Mr. Harun Rasheed is truly a global professional. He has worked in 7 countries globally, in 2 continents. He's worked with major brands. He's worked with Coca-Cola, he's worked with Citibank, he's worked with Maggi, and there are a lot of other things that he has to his name and his credit. He has been involved in major retail distribution networks and setting up different marketing and other challenges globally. In fact, handling PSO 3,500 retail outlets and managing the product is itself a big challenge. We are honored to have Mr. Shehryar Umar with us on board. This entire August panel will be moderated by our industry veteran and our pride, Mr. Yaqub Sattar. Mr. Yaqub Sattar, another 30 years plus of experience, started his career in 1981 with Ferguson, went to Saudi Arabia, worked for a very large company over there, joined Engro, worked there for 17 years, and after that, he spent 15 years at PSO working in different leadership positions, and he was a board member of various its associates and subsidiaries. So this is the panel that we have today, and we are very lucky that we will be hearing from them the views on the oil and the challenges over there. Before I hand over the mic to Mr. Yaqub Sattar, just a brief on the internet and some housekeeping issues that Mr. Yaqub Sattar will be moderating. In case he gets disconnected, I will be taking over and I will be conducting till he joins back in. If any panelist gets disconnected, we will go to the next panelist for the question. And when the panelist rejoins, and at that time, we will again engage on the questions with the panel who got disconnected. We will have a question answer session. There will be initial round of 1 hour, then we will have a question answer session. There will be audience poll which will run in between, and we encourage all the panelists and the audience to participate in that, which will be very interactive. Any question answers, please use the question answer booth. That would help us in collecting the messages. Post one last thing. After the webinar, we also run a paper on this webinar, a document which carries all the comments of the panelists, and any question answer that is left unanswered, we try to cover in that. Thank you very much, and Yaqub Sattar Saab, over to you.
Thank you very much, Fawad. Thank you very much, ICAP, for organizing this wonderful webinar. And thank you, Khalil, for your introductory remarks. Khalid Rahman Saab, the chairman of the PAIB committee, and Fawad, who's looking after this webinar, and I'm sure with a lot of support from Amber, from ICAP. We had an interesting session a few weeks ago, and that was on the exploration business. And it was a very, very exciting session. So we started off from the top, where the crude oil is extracted by these organizations. And we also discussed a lot about LNG the last time, because that is also a product which is coming. Today, we are moving ahead now. We are looking at the downstream business, which covers the refineries and the oil marketing companies. And again, a very, very exciting area. I think more energy and a lot of work and the maximum activity takes place in these two areas in the entire industry chain. Now, the oil industry, as we all know, is really going through a very, very difficult phase. We used to see Fortune 500 companies list, and the oil majors used to be there, ExxonMobil, Chevron, Shell, and all these people and all these companies. Now, when we look at the Fortune 500, they're not there. They've gone down many, many paces, and things are changing. So this shows the world is changing. What's happening? I mean, this COVID thing has further created a lot of issues for us. Now, the profitability of the organizations are severely under pressure. And I'm sure all three, Adil Saab, Harun, and Sheriar, they would agree with me that keeping profits in place for organizations in the oil business is a very, very major challenge these days. This year, COVID has really wiped out many, many economies. Europe is in recession. Our neighbor India is almost in recession now. Extremely difficult situations. Further, we have seen a rapid growth in the renewables. Now, renewable again directly competes with the fossil fuel. And we have seen many countries giving deadlines that, okay, from this particular year, we will totally eliminate the consumption of fossil fuel. So all these things, are having an impact on the profitability of the oil majors and oil organizations. So what do we do now? So the COVID experience showed us that only those companies which relied on technology could manage to survive. And even today, when you see the session that we are having is an alternate technology use that ICAP has taken over, is using to remain engaged with all the members. Had we not used it, we would be sitting and waiting for when the good times come. But no, all forward-looking organizations are now relying on technology. And every organization is innovating, trying to, in their boardrooms, the only discussion goes on as to how to survive, how to move forward, and how they are looking forward. And that's why we have a very distinguished panel today. And I'll go one by one with the panel. I'll first request Harun to come in, then I'll call in Adil Saab, and then Sheriar, so that we learn from them exactly what are the challenges you're facing in your organizations and the industry is facing from your point of view. What are the trends which are reshaping the oil industry? Because that's the topic of today. If there's a disruption somewhere, then people have to reshape, relook, and re-strategize. And how does the future energy company look like? Because the advent of technology and the alternate energy is really knocking at the door with such which are cheaply available. So Harun, I'll request you to go first. Try to time your sessions individually at 8 minutes, and I'll remind you when those 8 minutes are over. Thank you very much. So Harun, we start off from you.
Thank you, Yaqub bhai. The questions that you ask, you can talk about them for hours and hours. I will try to be very brief. The first one that you ask is, what are the biggest challenges your company and industry is facing in 2020 and beyond? So I will start with industry, then come down to company, and in company, there's Shell Group and downstream, and Shell Pakistan Limited. So I'll talk about both. So let me start with the industries. The oil and gas industry is facing what we see or what we call an energy transition. Surely, two things are going to happen. One is there will be a peak oil demand, whether it is in 2030, whether it is in 2025, or it has already happened. That I don't know. But I can reasonably tell you that if I look at all the different estimates out there, Saudi Aramco normally publishes the most optimistic estimate when it comes to energy growth. Even Saudi Aramco says somewhere in 2030s, oil and gas demand will peak. There are others. BP recently said oil demand has already peaked. COVID was a key milestone that kind of made us realize that. And then there are many in the middle. So what does that mean? What it means is that if the demand of oil and gas is going to peak in the next 10, 15 years, it will be, energy consumption in the world is going to continue and probably increase. So that bit of energy, which is now being provided by oil and gas, will be provided by renewables, solar, hydrogen, electric, etc., etc., etc. The renewable side is a fast changing space, so I will not comment too much on that side because you are talking about our industry and how it is changing. But it does mean that the impact on our industry is very, very significant. It starts with the oil price, because obviously as the oil price goes down, less people invest in oil. But the problem with that is, as less people invest, somewhere during the transition, you can reach a critical stage where oil price shoots up again. Because oil demand is not going to go down to zero, right? All we are saying is, today the demand is 95 or 96 million barrels a day. It has peaked. Slowly it starts to go down. When do we reach the peak? We don't quite know, but slowly it starts to go down. If on the other hand, production drops, suddenly oil price starts to hit the roof again. And one thing I can reasonably say is oil price is going to be a lot more volatile moving forward than it is today. That volatility in oil price, if I may, is going to result in a big impact on Pakistan. What do I mean? Every $10 movement in oil price, because oil is a relatively inelastic demand, oil and gas. Every $10 movement in oil price affects our budget by roughly $2 billion as a country. That's a high level number. And if oil price goes up by $10 a barrel, then our country has to import the same oil for $2 billion more. And that's significant, right? And you're clearly seeing a world where there will be more volatility. Now, what does it mean for our industry in Pakistan? It means many things. Number one, Adil Saab will talk more about refining, but I can say that refining capacity is going to be in the region. You're going to have excess refining capacity. You already have it. There will be closures. And we are already seeing some of them. Estimates vary by analyst, but those closures will be between 0 and 5 million barrels a day of capacity that will be taken out in the next 3-4 years. Europe will be the most affected place, or that's my kind of insight, because Asia still there's demand growth. But what does it mean for our companies in Pakistan? What it means is, and Adil Saab can talk more about it, is refining margin is going to remain compressed. Because our oil price or our import price is determining the refining margin in a way. It also means that if oil price remains low, then demand for oil products in Pakistan, at least in the next 2-3 years, will increase. Because we are a young country, our people are young, our motorcycle car park growth is explosive. Our economy needs more oil, more gas, till we make that transition to renewables. So that is the second thing it means, which is a relatively low oil price will mean more demand in the near term. That does not mean Pakistan will not be have its own energy transition. Pakistan will. and it will mean more volatile prices. What does more volatility mean? More volatility means that for the oil companies, now marketing companies, there will be periods of high income and there will be periods of negative income. And a company's capability to supply the market consecutively, and for the government's capability to allow a reasonably fair structure so that people do not take advantage of it, is absolutely key. Otherwise, companies like Shell, PSO, we will be at the losing end. And therefore, our governance structure in the country needs to be very proper. These are, in a way, trends that are shaping the industry in Pakistan. And, so then I asked myself, the future energy company. That's a very, very important question. And I believe I'm now in the last 2-3 minutes, sir, so I will try to wrap up. For our local companies, refining margins low, clear expectation of higher demand. On the oil and gas side, clear expectation of volatility. For volatility to work, rules need to be the same for everyone. Rules need to be applied in a consistent way for everyone to play evenly. But a growth market nevertheless, and a very important market for the oil markets across the world. Pakistan is and will become. Then, what will the future energy company look like? To me, if I kind of take a reflection back and go much back, 100 years, what was the oil and gas industry then? It was competing against electricity then. Tesla was a company then that was competing against Exxon for AC current, DC current, and how do you energize New York? There's a whole documentary on it because Exxon was saying it needs to be energized through kerosene because that is how it was energized. That's how lights were lit. And, the DC current was coming in and, there were companies saying, no, there's another technology. You can generate electricity differently. A big tussle and a big war was fought out. Today, the same thing is happening in a different context. The world wants cleaner, greener energy. So the future energy company, in my humble opinion, will be one that realizes that there is an energy transition, which realizes that I have to change how I provide energy to the world. I have to work with the government in whichever country I choose to work in, and with the private sector to provide energy in a meaningful way to my consumers who are today buying oil, gas. Tomorrow they might want electricity, or they might want a cell, or they might want a battery. And the future energy company will be one that is on the leading edge of technology. It will realize that there is a large technology play as the energy transition happens, because the energy transition can go in many different ways. And those with the best technology, those with the best ideas, those with the best capability to implement that technology in a safe, cost-efficient way will win. The future energy company will have a big component of R&D about it. The future energy company will have a big component of understanding how is the world changing? How do I play this changed world? What are the new products I bring in? How do I integrate technologies? How do I create that into something meaningful for my customers? For me, a very telling example, and with this I will end, is that of the Tesla of today. I go back to the year 2007. I was in Singapore. The market cap for Shell Group at that time was close to $220 billion. The market capitalization for Tesla at that time was close to $20 billion. It had just gone public a few years back, small company. Shell Group stays at about 150, 180, 120, depending on the day you look at, the price of the RDS share. Tesla today is worth $1 trillion company. What did they do right? They fundamentally created a vehicle which there was an underlying demand, and they managed to kind of bring something competitive to the market which people appreciated. That's creativity, that's risk, that's the capability of understanding market needs, responding to the market faster than others. Because parallel to Tesla, what people often miss is that there were about 100 other companies tinkering with the electric car. None of them have succeeded in the same way. Many of them have gone bankrupt. And so there was a guy out there who created the right mix of technology and market understanding and risk and created something. And that's what the future energy company will look like for Pakistan, for everywhere else in the world. So I will be quiet now.
As far as Pakistan is concerned, I think at some stage, I would like to know that, you see, every country has its own financial position, which is the economics, how the economics of that country is working. And with the discovery of coal, which is an abundant quantity available in Thar, it is not clean, but it is cheap. And it is it's indigenous, which will not require any foreign currency for Pakistan. Looking at our current account position also, foreign currency account balances. So just mull over it, because going forward, maybe that will be a question that vis-a-vis the affordability, can we directly follow the Western countries and Tesla and all those, or it will be a mixed bag where some affordable energy within Pakistan, availability of which is there, can also be used? Because
so you want me to respond to it now or
yes,
later?
Okay, let's hear it out now.
No, I leave it to you. You tell me.
Carry on. Then we'll move on to the
Time
next one. I'll give you 3 minutes for that, quickly.
Okay. I will keep it to 2.
Okay.
Pakistan is a country where demand for everything is growing, and it will grow. We have one of the youngest populations in the world. Yeah. The beauty to Pakistan is this capacity for all. In Pakistan, cost will always be an important driver. But one of the things that we kind of miss in the country is that a lot of what happens in our country is driven by global happenings. So let me give you an example. When I was growing up, there were hardly any Chinese products in the market. And, those that were there, they were, not really high quality. You would end up buying a British pencil or a Pakistani pencil or a German clock or a Japanese product because they were the right mix of technology and price. And same is going to happen with energy. So we will have a base load, inshallah, hydel, coal, wind, solar, oil and gas based, furnace, etc. You'll have a base load. But then, there will be changes in the market which will drive the consumer and the energy mix. I will give you a very concrete example. I worked out in 2005 in Shell Centre, London, the price of oil equivalent for the solar technology of that day. And I realized that the solar technology that day, even the most efficient, would compete with oil at $200 a barrel. Mm-hmm. Today, it competes with oil at under 20 or under 30. So what has happened? Pakistan had nothing to do with it, but solar cells have become a lot cheaper and a lot easier and a lot more flexible. And when you go out to your villages, you see houses with 2 goats, 2 sheep, maybe a cow, and a solar cell. And in the house, you see a bulb lit with that solar cell. And that's an energy transition you're seeing. Because पहले वो लकड़ बालते थे, अब उन्होंने एक वो सोलर सेल लगा लिया है और उसके साथ एक छोटी सी बैटरी लगा ली है, in a pretty cost efficient way because the Chinese have made it. हमारा उससे कोई लेना देना नहीं था, लेकिन हो गया. तो अब ये कोल को भी ये चीजें इफेक्ट करें. Back to yourselves.
Okay, thank you very much, Harun. That was a good intro. And Adil Saab, fortunately works for a company which is the only company in Pakistan totally integrated. Exploration maybe hai. You're also in the refining business. You're also in the oil marketing business. So Adil Saab will take your views on these 3 points that I had mentioned earlier on, like the challenges your company is facing in this particular scenario, the trends in your company or companies, and the future that your company sees, that how should you be positioned for the future. Let's hear you out, Adil Saab. Thank you.
Okay. Thank you, Yaku Saab. Since you have mentioned the integrated nature of the Atak Oil Group, I would like to share that Atak Oil Company happened to be the first energy company or oil and gas company in this part of the world. And it discovered oil as early as 1915. And interestingly, as Harun mentioned how things are transitioning, at that time when the oil was discovered, the only product being used was only kerosene oil. So later on, our refinery, like Atak Refinery, was set up in 1922. It was commissioned in 1922. Again, this was the second oldest refinery in the whole Indian subcontinent. Anyway, so Harun is Shahryar are already here to take care of the OMC business. So I'll focus my talk on the refining sector. And if you allow me, let me start with sort of introduction or give you some salient features of the refining sectors of Pakistan. So what we have is that, and as I believe, or I can presume safely that most of the participants are members of ICAP. So they would feel probably more at ease with some numbers. So I can start sharing of some percentages and numbers as well. So right now we have 5 major refineries in Pakistan. And namely Parco, National Refinery, Pakistan Refinery, Atak Refinery, Baiko. These are the major 5 refineries. Out of these, National Refinery, PRL, and Baiko, they're located in the south, in Karachi area. And Parco is mid-country, near Muzaffargarh, and Atak Refinery is, of course, in Rawalpindi. Now, the total capacity in terms of barrels per day is about 420,000 barrels per day of all these refineries combined, which in tons would mean almost 19 million tons per annum. There's the capacity. These are the refineries we have. Now, of course, ARL happens to be the oldest. And interestingly, you know, over all these years, we've been hearing about new refineries coming up in this sector. I remember as far as back as almost 15 years back, we would hear names like Indus Refinery coming up, a Trans-Asia Refinery coming up near Karachi. In fact, probably it was Trans-Asia, which major equipment also arrived and is still lying somewhere in the desert. It must be now gone up by now. And then like last 4 or 5 years back, the KP government signed at least 5 MOUs with different companies to set up refineries in the Khyber Pakhtunkhwa area. You would recall that about a year, 2 years back, Saudi Arabia, Aramco announced setting up a 300,000 barrel refinery near Gawadar. Then we keep hearing about say 30 years back, there was the talk of Pak-Iran refinery. That land is now with the project of Khaliga refinery. What I mean is that we have been hearing about new refineries coming up, but we don't see any real progress in this area. So coming back to figures, so like these refineries are meeting about, like I'm taking figures of 1819 because these are published figures by OCSC, shared by OCSC, so they're authentic figures. So 1819, the total demand was about, again, it's almost stagnant now for 19 million tons per annum. So for total oil products. And these refineries were meeting only, these were operating at about 66% throughput, 1819, which comes to about 12.71 million tons in that year. Out of this, these refineries processed 28% local indigenous crude and 72% was imported crude oil. Now, for quite a few years, the local crude production has been stagnant around 80 to 90,000 barrels per day. So we are heavily dependent on imports in form of crude oil products. Our major imports are diesel, HSD, and MOGAS, motor gasoline. Furnace oil, of course, it is going down, as all of you must be aware. Like about 4 or 5 years back, our total demand for furnace oil was more than 9 million tons per annum. And last year, it was down to almost 3.4 million tons. It's because more and more power plants are moving to other energy sources. From country point of view, the energy mix has improved. Number of coal projects have come online. LNG, huge projects on LNG have come online. Hydel is also going up. So demand for furnace oil is drastically going down. So this is one of the challenges which the refining sector is facing, how to dispose of our furnace oil. So like if we take the total indigenous contribution in our oil demand, is about 18%. And the balance 82% is imported either in the form of crude oil or products, mainly HSD and Now, let me say a few words about why do we need to have local refineries. In the last year or so, a number of statements have come out at the highest level from the government or non-government sectors that why do we need to have local refineries? They're too old, they're too inefficient, whatever. And why we don't just simply shut them down and go for imports 100%? Why not? That's a question which has been posed by many. Now refineries have, and it's not only for Pakistan, for every country, refineries are considered to be strategic assets. Why? Like for example, you would recall that both in 1965, some of you who are as old as me, they would of course recall, that in both 1965 and 71 war, Attock refinery was the first to be attacked by the enemy because we happens to be the only refinery in the north. So was Kemadi terminals in 71 war. So oil is a strategic asset. And unfortunately, though I can't talk much about that aspect on a public forum like this, but unfortunately, we do not have what they call strategic storages of petroleum products in Pakistan. Now, we often talk about Indian examples. What did India do? In the year 2000, they came up with a 25 years vision for the refining sector. And the main target was that we need to meet at least 90% of what we call middle distillates, mainly diesel, of the country requirement by local refineries. And they achieved it much earlier, say within 5-6 years, they crossed that barrier. And of course, as you all know, India today has probably the largest refining sector, not only in terms of volumes, but also in terms of quality of products. And they're exporting to places like California, which has the most stringent environment-friendly specifications. How did that happen? I'll come to that later. So it's not only that refineries are strategic assets, we also save a lot of foreign exchange for the country. In simple words, it's always cheaper to import crude oil as compared to importing of products. Then it also provides the only outlet for the local indigenous crude oil. Like for example, right now, about, I would say, last year, I think the figure has even gone down to about 75,000 barrels per day, the local production. And majority of it, or most of it, is coming from Khyber Pakhtunkhwa directly to Attock refinery. In case of, if you don't have these refineries, or if, God forbid, if Attock refinery is no more there, this crude would have to be taken all the way to the port to be exported. And even now, some of the crude which cannot be processed locally, it has to be imported in terms of sort of condensates, what we call condensates. So that's would be a nightmare logistically as well as financially. Then of course, the refinery sector pay billions of duties and taxes to the government of Pakistan. And also in terms of meeting the local demand, the refineries are meeting 60% of the total petroleum products demand, 60% of diesel demand, and about 30% of motor gasoline. And we're meeting 100%, almost 100% of jet fuel and kerosene demand. Now, after giving you this introduction, let me take a sip of my tea.
Your introduction has taken your entire time.
Really?
So,
Okay. So
so
I'll try to be brief now.
yeah, please.
What are the challenges we are facing right now? The challenge we are facing right now is, especially during the last 2-3 years, that the refinery margins are too low now, right now. It's almost negative at times. Like I recall a few years back, the margin on diesel would be around $10 to $12 per barrel. Motor gasoline would be maybe $8, $9, $10 per barrel. Only about a month back, the margin on motor gasoline was negative. Even now, the margin on diesel is almost zero. It's almost the same price as crude oil is. These are, I'm talking about international prices. So it's extremely difficult for us, for the refineries, to operate on these negative or very thin margins.
But Adil Saab, just to make a small comment here, the reason why you have very small refining margin is because of the technology of the refinery, which is hydroskimming, versus deep conversion refineries, which we know have much higher margins. So the challenge is basically to move our refineries towards deep conversion.
Yeah, Yaqub sir, let me tell you this.
Yeah.
Even if we were deep conversion today with these margins, we would still have been unsustainable. Let me give you an example. You must have read about it. Even in the US, number of refineries are being closed. Some are converting to biofuels. Only 2 weeks back, there was a news item in Australia. Their refineries had to be given subsidy by the government, I think about $1.5 billion to keep them running. So these are not hydroskimming refineries in Australia and US. So even for a deep conversion refineries, it's quite difficult to sustain, to keep running, operating. So this is a challenge. Generally, it's all over the world. Then another problem we have is, like the history shows that in Pakistan, the product specifications, we have gone for abrupt changes. Like I recall when we were having 87 round of motor gasoline, then the past government came up with 92 round without giving us any time to go up. Only recently they've gone Euro 5 without even having consultation with the stakeholders. So these kind of, these improvements or upgradations needs time and need timelines. Then of course, all of you be familiar with the problem of furnace oil disposal right now. About 3 years back, the government decided to shut down all the furnace fuel-based power plants. I mean, at least that they wished for, but though they're still running to some extent even now. So the refinery was faced with this challenge because we don't have a choice. If the refinery runs, especially our kind of refineries, furnace oil has to be produced. We cannot just shut it off like that. On top of that, another challenge came up of IMO 2020. So starting January this year, 2020, the specification of furnace oil internationally was drastically reduced in terms of sulfur. So previously, like 3.5% sulfur was allowed, it came down to 0.5 of sulfur. So all these furnace oil used in shipping, we couldn't sell that. So the prices were drastically reduced. This was a challenge which came up. Another challenge for the refinery, which has been there for years, but now this year we are really feeling the crunch now, is smuggling going on from Iran side of petroleum products into Pakistan. It has been there for ages, but we noted that especially when in June this year, when there was huge shortages of petroleum products in Pakistan. One of the reasons was that because of COVID, the smuggling had sort of stopped across the border, and the demand had just gone up like anything. At least more than 100,000 tons of demand, increase in demand could have been attributed to the smuggling from Iran, which was stopped at that time. Now I think it has opened up again, and again we are facing right now this challenge of disposing of even our diesel right now. Then problem like turnover tax, things like that, and I think what we need to focus is that in case of policies, this would be my last point under this topic of challenges we are facing right now. Petroleum policy for the downstream sector, which is currently applicable, that was made in 1997. So it's more than 23 years that has not been updated. and we've been asking the government, things have completely changed. It has yet to be updated. And unless we come up with a policy which gives enough incentives to the government, to the refineries, we cannot even think of upgrading our refineries. So Yaqub Sahab, as you mentioned, we are fully conscious of this thing that we have to upgrade. We like to get rid of our furnace oil or to reduce it. We have to go for hydrocrackers or other technologies to produce more value-added products. No question about that. But to go for that, like, this refinery sector is so much capital intensive. Like every refinery would have to invest at least $1 billion every refinery. So total $5 to $6 billion would have to be invested to upgrade our refineries. Under the current circumstances, the bottom line we are having is simply not possible to even consider these. So the good thing happening, which right now is that we have been in serious negotiations or consultation or brainstorming sessions with the government, especially at least for this whole month of September. We have been having regular meeting with the Ministry, with the Petroleum Division. And the positive thing we note is that there seems to be, at least now, some realization that refineries have serious problems and challenges. And hopefully, we are hoping that the government would come up with some measures to provide us a breathing space, not only to continue operation, but also to go for upgradation of the refineries. So that's what we are hoping for. To give you an idea of the refinery losses which we have suffered in 2018-19, all the refineries combined suffered a loss of 35 billion rupees. This was mainly because of rupee devaluation in that year. In 1920, all the refineries combined suffered a loss of 25 billion rupees. Now, this was mainly because of COVID-19. Only in March and April, we suffered a loss of about 47 billion rupees only because of inventory losses, the refineries combined. Now, talking about the last, you have the way forward for the energy company of the future. So I'll just take maybe a minute or two. Of course, as Harun mentioned, we have to keep with the times. And we simply cannot ignore, though the per capita energy consumption in Pakistan is still very low. And unfortunately, because of this stagnation in the economy, the demand has been almost stagnant, as I mentioned earlier, about 19-20 million tons per year. But I mean, being an optimist, I'm sure that these energy demand would pick up. And in spite of a reality which we are facing, which we can see coming up, the electric vehicles, solarization, things, new technologies like that, I personally feel that still for the next 20 years, 15, 20 years, these refineries will still be needed. The need for fossil fuels is not going to disappear that soon. Of course, the demand is going to go down, and hopefully, in conjunction with that, the demand, if the economy picks up, the demand would also go up. So probably we would still survive for some time to come. We in the ATA group are seriously taking these challenges. We are considering various measures for diversification. We started working on solars about 4-5 years back. So we're starting from simple R&D within our own facilities. Right now, we are setting up 1.1 megawatt solar facility for offices here in Morga. My old Attic Refinery office was equipped with a solar system almost 4 years back, our own indigenously built in. So we are getting ready for face those kind of challenges and the new technologies. And I think another positive thing which I would like to mention, because we are good at blaming the government for everything, but some positive things have also happened. In addition to what the negotiation we are having with the government right now, that only about few months back, they agreed to, 1 month back, I would say, agreed to change the pricing time to fortnightly from 1 month. Ideally, we should be moving hopefully to a weekly announcement of prices, or maybe ultimately daily basis. Another positive thing which the government did was that they have now given us the actual exchange rate. So hopefully it would sort of provide some protection against the rupee devaluation in future. So I would end here, and then you can ask any question you would like to. Thank you.
Thank you very much, Adil Saab. I think that was a very good overview. Just a caution on the pricing that you have for 2-week, bi-weekly, or twice a month pricing, fortnightly. It looks very good to the government when the prices are going down. So every 2 weeks there is a good news. But when the prices start going up and you give a bad news every 2 weeks, then you'll go back to the 1 month pricing. That's at least my personal experience.
Yeah. Yeah, but
So,
even, okay, may I? Even, when the prices are going up, previously what it used to happen was that the whole month would be reflected at the end of the month. So if the prices was going up throughout the month, there would be a big increase coming up at the end of the month. So at least it would give them some respite that after 15 days, the rise would be half of what would have been at the end of the month. So I think
I wish you all good luck. I wish you all good luck in that area. Yeah.
Thank you.
Okay, now we come to Sarfaraz Shehryar. Shehryar is looking at marketing of one of the largest company in the country. And I'm sure you have a story to tell, Shehryar. PSO has a lot of other responsibilities. When others are away, then you come in and you bail out the country in bad times. So I'm sure these past 6 months were really very challenging. But looking at your numbers, I was very happy to see that you did well. So let's hear you out on these 3 areas, your challenges, the trends that you see, and the future that you see in PSO.
Okay, thank you, Yaqub. Assalamu alaikum, everyone. So I will sort of answer in 2 sections, primarily starting with the impact of the lockdown and what we faced, what the learnings were from that. And then I will talk about the investment in infrastructure, etc., which was the second part of the thing, and then going forward about the future. So, like everybody else and like the entire world, when we started the lockdown, 3rd week of March, we saw an immediate precipitous drop in the consumption of our fuel products. Obviously, motor gasoline and diesel just dropped off the cliff. I think we were down about 65% on our daily run rate. So, similarly for our aviation fuel, because the flights stopped running, we saw a huge reduction in our aviation because we are basically the industry in Pakistan. So our aviation went down significantly, and that to a large degree is still down to about half of what we were doing pre-COVID. But the interesting thing was, and Adil Saab also mentioned this earlier, is that in about 3.5 weeks, which was sort of the 3rd week of April, we started to see an uptick in the demand. Now, this whole scenario was also overlaid with the challenge of rapidly declining prices over the same time period. So our challenges were multiple. One was how to sustain a supply chain, which is, because we are public sector, our supply chain or our timelines for supply are much longer than they would be for a private sector organization, because we follow the public procurement rules. So we had a lot of cargoes on order, which suddenly looked very uncertain as to when those cargoes would be able to come in, berth, and be able to sort of sell them off. So we had to, on the one hand, backstop our supply chain and hold off a lot of the cargoes that we had ordered for both diesel and motor gasoline. And in that, particularly for diesel, our relationship with Kuwait Petroleum was very, very instrumental in us being able to manage that. And motor gasoline, because we had orders against tenders, we were able to postpone them in consultation with our suppliers. On the downstream side, like I said, in about 3 weeks, we started to see an uptick. And that increase in volumes continued all the way through June. And the reason for that, particularly for diesel, as Adil Saab mentioned, is that we had a lot of diesel coming in over the last 2 or 3 years from outside Pakistan through irregular sources. And that stopped because the borders were sealed because of COVID. So that stopped, and we saw a huge spike in diesel requirements. So all of the cargoes that we had sort of cancelled or deferred, we started to bring those back again. The kicker on top of all of this was the pricing, because as the pricing dropped, as people in this industry know, your net realizable value for your product starts to go down. In the month of June, for example, at PSO, and probably all of us in the industry, downstream industry, were losing about 20 rupees a litre for everything we were selling. And because of that reason, many of the smaller companies or other companies started backing off their sales because, when you have very small margins to begin with and you're losing 20 rupees a litre, they held off on some of their sales. So as a result of that, a lot of the other OMC's outlets started to go dry. And there was intense pressure on PSO to keep the supply chain of fuels running. And, fortunately, we were able to do that. Our market share for the month of June skyrocketed into the 60s and 50s for diesel and motor gasoline. It was a very, very tough time because there was intense pressure. Our supply chains were restricted as well. We couldn't take on the entire volumes of the industry. So the operations for about a month and a half was under intense pressure by our dealers and by, because all of our outlets had, long lineups, and a lot of the other outlets had shut down. So they started coming back online towards the back half of June. And that improved a little bit, but it was a very, very challenging time for us. So I think some of the key learnings for us there, and I think, sort of a no-brainer, is that the volume of storages that we have, and this is something that PSO has been investing heavily in the last 2 years, is to increase our storages, both building new storages, mainly up country, as well as repurposing a lot of these storages that we have in, which were originally for furnace oil. Because as Adil Saab mentioned earlier, the furnace oil consumption has been declining significantly over the last few years. So we are trying to repurpose a lot of our storages now to motor gasoline and high-speed diesel. So that is critical for everybody in the industry, for all the players, and there are a lot of players in the industry, for the entire industry to look at developing storages. The matter of strategic storages, where the government funds the construction and the maintenance of storages, is a bigger one that perhaps we cannot answer in this session. But I think it's incumbent upon all of the individual companies to build their own storages and to increase that, so that these sort of situations don't arise. I think the other big challenge we all face now is port infrastructure. Because right now we have only 2 ports where petroleum products are coming in. One is Kimari and one is Port Qasim. At Kimari, the number of ships coming in, regardless of the port infrastructure, the number of ships is declining. And the number of cargoes coming into Port Qasim is increasing, because Port Qasim is connected to the white oil pipeline, which is going to be going multi-grade, over the next couple of months, or whenever all the connectivities are in place. So as a result of that, there's going to be immense pressure on the Port Qasim infrastructure. And we are already seeing that with extensive delays in the berthing of cargoes. I'm sure Harun and Adil Saab are also seeing similar delays and lots of demurrages for our cargoes there. So developing the port infrastructure is vital in order to ensure that we reduce the fragility of the supply chain. Because right now it is highly dependent on these 2 ports, which particularly Kimari is aging. and now being used less and less, because once motor gasoline goes into the white oil pipeline, Port Qasim will become highly critical, and I think there will be more pressure on our costs because of higher demurrages incurred because of late berthing of vessels. So this is some of the sort of a recap of where we were, from the April, May, June period. Now, in terms of talking about the future, I think there's been some discussion. Harun has also mentioned, the sort of evolution of renewables. But I think if we look at the evolution of renewables around the world, there are actually very few countries which are actually moving or have moved a significant part of their energy to renewables. If I look at North America, and I look at particularly the automotive industry in North America, the electric vehicles are less than 1% of the total cars on the road, and this is after 15 or 20 years of the EVs being sort of in place. Although they are growing at a higher rate, I don't think that in Pakistan we're going to see some very rapid adoption of electric vehicles even in the next 5 to 10 years. I think the first we'll probably start to see that in the motorcycle sector. Automobiles is going to be a long time coming because A, we just can't afford it. B, it doesn't make sense to produce electricity with so-called dirty fuels and then run electric vehicles in that, because it sort of defeats the purpose. Because if we're producing power on coal and on gas and some furnace oil primarily, then it doesn't make sense to do that. It only makes sense if the whole chain is clean, as we're starting to see in some countries like Germany and Denmark and some of them who are investing heavily in that. So I think I would agree with Adil that we are in Pakistan, at least, from the kind of growth in energy, we are I don't think this industry is going to go away for at least the next 30 or 40 years. Yes, there will be changes, perhaps at a smaller scale at individual levels, as many people are electrifying their homes through solar. I think some people on the panel itself have installed those. So that will gradually change, but I think that it will not have a major impact on the oil and gas industry, at least in the next 10 years. I think we will continue to do business pretty much the same way as we have been. The challenges are more, I think, regulatory, because in a developing country with low per capita incomes like Pakistan, the challenge for the government is to balance the business interests with the consumer interests. And because the consumer affordability is generally low, hence the regulation for most governments tends to favor the consumer rather than businesses, which is why, as some of the numbers for the refinery losses that Adil has mentioned, we are, similar numbers have been seen by a lot of the OMCs, including PSO, for this year, where we had a loss for the financial year because of the inventory losses we suffered in the last quarter. So I think that this is something that the industry will have to continue to bear, at least for the short term. I don't foresee a major change in the way the pricing is done. It will still be cautious, with primarily the consumer in mind, both for all energy prices, whether it's gas or whether it's petroleum or power. So that, I think organizations are going to have to find their own efficiencies. And at PSO also, we're looking at reducing a lot of our expenses. We're looking to automate a lot of our processes, improve the time that we are taking to conduct a lot of our business. So I think over the next 12 to 24 months, there will be significant changes in our cost structures in terms of how we manage our business. So those are some of the things that we are looking at individually as an organization. So I'll end it now and over to you, Yaqub.
Excellent. Thank you very much, Shariar. And sorry, I forgot to thank you because people should know that Shariar is in Toronto and he joined us 6 a.m. in the morning. So that's the passion he has, for the industry.
Yes.
So thank you very much, Shariar. And again, talking of the electric vehicles, I was glad to see a charging station installed by you in Islamabad. So that was, I think, a good sign that you've given.
Gigi, and there'll be a few more of those, but strategically placed.
Yeah. Okay, now it's over to Fawad for a minute because he wants to put a poll question for the viewers. Yeah.
If I may add, I think Petroleum has also installed a fast charging station right there at the blue area in Islamabad.
Excellent, excellent. That's I didn't hear about it, so that's why it's not in my mind. Very good then. If you have installed it, then excellent. If somebody has an electric vehicle, you can charge it in Islamabad at the moment only, right? Not in any other city. Yes, Fawad, over to you.
We will be running a poll. We will give a minute break to all the speakers. All the participants are requested to please participate in this poll. We will be sharing the results in a minute's time, and then so our first question is, what is your prediction on the time frame in which the oil demand will improve?
Is this a global one or a Pakistan question?
It's both. It's a trick question.
Okay. The answers for the two might be different.
Okay.
I think let the question be for global, because that is what will drive the international prices. So if the demand goes up, the prices go up. So people have to now guess as to when will oil start moving up, if at all it will move up. So it's a function of demand supply.
Interestingly, most of the participants feel that it's a 1 year to 2 year time horizon in which the oil demand will improve. And 34% believe that it would be within 6 months to a year's time. Thank you.
Good. That was interesting. Harun, we'll start our quick question and answer sessions, and there are a couple of questions I have. The one that I want to ask you, Harun, is on the local scenario now. As we have seen, there's a mushroom growth. I drove from here to Islamabad, and I can't remember how many different types of companies that have started, there's a mushroom growth of fuel stations and oil marketing companies in the country. And the amount of license that the government has given is naturally the two ways on it, 2 points on it, right? Like, yes, it will create a lot of competition between the oil marketing companies, but then there should be a limit of the number of companies which have been given licenses. So I'd like to take your view now. Are you seeing any mergers and acquisitions now happening in this industry because of so many players? I'm not sure if they'll all be able to make money, or if all have the deep pockets and capacity to sustain those losses that some of the majors have sustained over the past, in the past 1 year. So what's your view on this, and what opinion do you have, so that this can be an input into the government of Pakistan's policy making? You have to open your mic, Harun.
So you asked a very deep question. I will try to I will try to keep the answer brief.
Yeah.
We are a regulated market. in the margin structure allowed, one of the first things we need to ask ourselves is, are we sustainable as an industry? What do I mean? My forefathers and my parents and grandparents and 7 generations have lived on this in this part of India or Pakistan, the subcontinent. And probably the last 7 generations had clean drinking water. They had access to clean air. They were a tribal community. We would live in tribes, we would survive in tribes. But the basics were good. Clean air, clean water, clean environment. What have we delivered to them? And our industry has a contribution, and I'll go to that contribution and then answer your question. What have we delivered to them today? Today, if anyone thinks they have clean air, dude, think again, you don't. Our air quality is one of the worst in the world. And if you think that Pakistan had nothing to do with it, sab India se aa gaya, to think again. Amritsar ka air quality Lahore se behtar hai. Ye kahaniyan band kare. Stop blaming others. Subsoil water हम तबाह कर चुके हैं. And when I say तबाह कर चुके हैं, I mean तबाह कर चुके हैं. क्योंकि फैसलाबाद के इर्द गिर्द के गांव में 14 साल के बच्चों के सफेद बाल हैं. जो when I was growing up, तो गांव में और शहर में एक बड़ा फर्क होता था. गांव में ना गंजा मिलता था ना एनकू मिलता था. शहर में और खास तौर पे शेल में जो ऐनक नहीं पहनता था उसमें कॉन्टैक्ट लेंस लगाए होते थे. हमने माशाल्लाह वो फर्क भी तबाह कर दिया. जिस स्पीड पे जा रहे हैं, बहुत जल्दी बच्चों को 5वीं बर्थडे पे एक ऑक्सीजन का सिलेंडर गिफ्ट किया जाएगा, बेटा इससे हवा पी लेना. एंड टू से कि हमारी इंडस्ट्री का उससे कोई ताल्लुक नहीं, इज अ बंच ऑफ नॉनसेंस. इस मुल्क में 12-15 हजार पंप्स हैं, आधों ने नीचे सॉइल के अंदर तेल लीक किया हुआ. आपके मार्जिन में इतनी गुंजाइश ही नहीं, ना आपके रेगुलेटरी स्ट्रक्चर में इतनी इन्फोर्समेंट है कि उसको लीक को फिक्स करें जाके. डेपोज हैं, बड़ी बड़ी कंपनियों का नाम नहीं लूंगा, एक एक डेपो के नीचे तेल लीक हुआ होगा. उस तेल को साफ करने के लिए पूरी कंपनियां बैंकरप्ट हो जाएंगी. अगेन मैं नाम नहीं लूंगा. But don't kid yourself. We have a big, massive problem to which we are contributors as an industry. ये जो environment, ये जो regulatory structure है और ये जो 35 marketing companies बन गई हैं, this is multiplying the problem. टीन के डब्बों में तेल रख के बेच देने से इंडस्ट्री नहीं इंप्रूव होगी. सो एक तमाशे के और कुछ नहीं खड़ा हो रहा. जिस दिन इस तमाशे पे पाकिस्तान जागेगा, जो मीडिया हेडलाइंस आनी है, जो पब्लिक अनरेस्ट आना है, किसी को संभाला नहीं जाना. The solution lies in responsible governance and in responsible operations. And it also lies in a reasonable margin. Now, margin reasonable है, ना responsible governance है, ना responsible operators. और जितना ये companies multiply हो रहे हैं, उतना problem multiply हो रहा है. I will not name anyone because it's not appropriate. लेकिन to say कि हमको बड़े अच्छे future को देख रहे हैं, that's nonsense, dude. We are looking at serious problems in front of us. And the solution is in good governance, responsible governance, restructuring of the laws. 165 laws हैं जो all industry को govern करते हैं. Government में एक बंदा बता दो जिसको 165 laws का पता हो. एक बंदा बता दो. इंडस्ट्री के 4 बंदे बता दो जिनको पता हो. नहीं पता. वो मैं इसलिए कह रहा हूं कि मैंने PwC को बहुत पैसे दिए थे वो लॉस जमा करने के लिए. कौन सा रेगुलेटरी बॉडीज का हाल ये है, ये बिल्कुल ऐसे मोटरवे पे आप चलते हुए जाएं, एक बॉडी आपको बोले यार तुम 40 से ऊपर गए तो मैं तुम्हारे को नाक के हवाले करूंगा. एक दूसरी पुलिस वाला खड़ा हो, तुम 135 से नीचे ऊपर गए तो मैं तुम्हें नाक के हवाले करूंगा. अब आप 40 वाले की माने 120 वाले की माने. So the problems are deep. They are something to do with governance. This mushrooming is not being done responsibly. And it will at the end take a price on the ordinary citizen of Pakistan. The fixes are obvious. They are not very difficult, but they need thought, they need determination, and they need implementation. I hope I answered your question, Yaqub sir.
About this can't continue for long. Everybody cannot make money with so many fuels, OMCs. So are you seeing any mergers and acquisition going on in the future?
I see closures, I see mergers, I see media hype, I see volatility, I see Alzam Tarashi, I see unnecessary hoo-ha, I see big responsible companies losing out. I see lots of things happening.
Okay, that was, I think, thank you for that answer. You're clearly not very happy with the situation at the moment.
No, because it's not helping our country. देखिए, end of the day,
Exactly.
आपने environment तो पहले ही तबाह कर दी है. अब बच्चों को आपने ये कहना है कि यार तुम एक ऑक्सीजन का सिलेंडर भी ले आओ साथ.
Right. अच्छा आदिल साहब आपसे एक सवाल जो what I want to ask you is we briefly touched upon the deep conversion and the hydroskimming refinery, and there is a need to move towards better technology so that you can produce better fuel, you can reduce furnace oil, and you can become a profitable organization and an industry as a whole, so that you can add value to the country's economy. Now the point is, what aspect of regulations and policy making is restricting you from that? जो आपने briefly touch किया था, you had mentioned कि हम government के साथ बात कर रहे हैं, discussion कर रहे हैं. Give us a few pointers, like what is exactly happening, what discussions are going on, and what are your recommendations so that you are given a good playing field and all refineries in Pakistan start, becoming a very profitable one and make more better quality products.
I think before I answer this question, let me just say a few words add a few words to what Harun said about what's happening about this regulation of the industry. I think it's, with the mushroom growth of oil marketing companies, the role of OGRA has become very, very important. If in order to OGRA to become a real regulatory authority, they need to increase its capacity. There are serious capacity constraints. Like, expecting OGRA in its present form to keep track of the quality issues, even this issue regarding this hoarding, so-called hoarding or stocks, keeping minimum days of stock, things like that, they simply cannot monitor the current setup they have. So I think OGRA needs to be strengthened, its capacity needs to be increased, take care of all these quality issues as well as other issues. Okay, coming back to your question, as far as refineries are concerned, all refineries are very fully conscious of the fact that we have to upgrade, because we simply cannot postpone improving our specification or keeping pace with the world. I mean, look at India, surrounding countries. So we have to gear up for not only Euro 5, but Euro 6 and even other coming up in future, specifications coming up in future as well. So right now, as I explained in the beginning, the current financial position simply does not allow us to go for these kind of heavy investments. As I mentioned, at least the refineries will be needing $5 to $6 billion to upgrade the refineries all combined. So what we are like to face this furnace oil issue. To upgrade furnace oil, you need to set up a hydrocracker or some other technology to convert furnace oil into high value products like diesel or motor gasoline. So one proposal which we are currently considering, all refineries, to set up a joint hydrocracker somewhere, say maybe mid-country or somewhere, in which all the refineries can send their furnace oil to that jointly owned hydrocracker to upgrade their furnace oils. This is one, and it seems the economies of scale would come in, and then logistics would also help. So this is one of the proposals which is currently under consideration, but it is just to be seen, proper feasibility is carried out to see whether it can be done, whether it's doable or not. In addition to that, all the refineries, like some of the refineries, they're still producing diesel with more, even below like Euro 1 diesel, I would call it, with higher sulfur content than 500 ppm. So they would have to set up diesel hydro desulfurization units. Like some of the refineries like us at ARL and NR, we have already added these units. Parco also has a DHDS unit, but some of the refineries have yet to set up this unit to take care of the sulfur content in diesel. And then some carry out some more modifications or add-ups to achieve Euro 5 standards in diesel. But talking of motor gasoline specifications to meet Euro 5, one constraint is of sulfur content. Fortunately, all motor gasoline produced by the local refineries meet the sulfur specification. So the sulfur content in motor gasoline is already less than 10 ppm in almost all the refineries. So that's not a big issue. But then there are other specifications like RON. Currently, we're adding some additives to improve our RON. The metallic additives ultimately have to be given up. Then the aromatics, benzenes, these contents. So like in our case, we plan to set up a CCR unit, continuous catalytic reformer, which would enable us to produce Euro 5 and even higher grades of motor gasoline. So other refineries are also considering these kind of projects. So we are working on it, but the basic point is that what we are negotiating right now with the government is to give us some protection or to enable us to take up these projects. You see, one thing I would like to make clear. If the local refineries are expected to compete with the Middle Eastern or the regional refineries with no protection, that's simply not possible. I mean, the kind of economy of scales they have or other protections like no income tax and no custom duties, we simply cannot compete. So the refineries locally to survive, they would always be needing some sort of protection, which is already provided to other industries like auto industry, pharmaceutical, steel, and other industries. So if we have to have our local refineries, they have to be provided some kind of protection.
But just for the viewers' understanding, what type of protection are you looking at? Do you have any specific items so that it could be understood whether can that be done?
These specific items are under negotiation with the government.
Okay.
So I think it's not the right time to come out with these things. Once things are finalized, of course, everything would be public.
Okay. Excellent. So thank you very much for that. And now I move to Shariar. Shariar, we understand that in the oil business, it's the infrastructure at the end of the day which really gives you the flexibility to do what you want. And there are major infrastructure constraints even at the moment in the country. Now, being the largest throughputter in Pakistan, if you force rank, what are those top infrastructure investments which are really required at the moment? And if you could identify some of the really big ones, the top three.
I think, as I said earlier, storages would be the first one, because having product in storage protects you from pricing volatility as well. However, particularly as we move to, pricing every 2 weeks, then hopefully weekly and so on, daily pricing eventually when we get there, because many neighboring countries have also moved to daily pricing. So the storages for each individual OMC and for the country as a whole is very important that we have investment in those. I talked about ports, the port infrastructure, because we continue to be dependent on imports. So the port infrastructure is very, very important. The third thing, obviously, I'll talk about is connectivity. We currently have one pipeline carrying product from Karachi to mid-country. And that will soon become a multi-grade pipeline, which means there'll be less motor gasoline being transported by road across the country. Obviously, that will positively affect the safety on the roads as well, as we've seen a lot of accidents happening. Every month there are issues with dangerous product spilling in accidents. So I think that will be a good step. There's also a project to link the Punjab with the frontier through pipeline again for transportation. So that will bring down the overall cost of product as well. once all these projects are set up. The issue again, as mentioned by the other panelists, is other margins, because all of this investment requires there to be healthy margins for the industry to be able to make these investments. So if the margins aren't there, then everybody's trying to operate on bubble gum and scotch tape, and try and keep things running. I mean, the infrastructure is aging, particularly in the south, in Karachi and Kimari. This is very old and aging infrastructure. We continue to have problems, with pipeline leakages, etc. So it's very fragile. And I think that is something that we all need to be cognizant of in order to do that. From a downstream perspective, I think that there's really no shortage of retail outlets now, as you yourself mentioned, that there's a plethora of retail outlets across the country. Wherever you go, it's not a problem to get fuel. What quality you get, or what are the safety standards, that's a big question mark. So eventually, and just addressing one of your earlier questions regarding mergers or consolidations, I think I don't know if there would be so many mergers and consolidations, because a lot of these companies are sort of fly-by-night operators, where they have very little investment in infrastructure. Their retail expansion model is basically a pay and set up a retail outlet type of a system, where they're not really invested in these outlets. Anybody who can come up and pay a certain fee, they'll sort of give them their brand name and let them set up an outlet. So it's the whole system is quite unregulated and unenforced that way. And then there are the so-called dabba stations or illegal outlets, which are not associated directly with any oil marketing company. And there are tens of thousands of those as well. So it's going to take a lot to be able to sort of improve the governance standard, improve the enforcement for all of these. But in terms of ranking, I would say storages, ports, and then connectivity, in that order.
Excellent. Thank you, Shariat. Excellent. I had so many other questions, but when I saw the chat, our participants are really putting in a lot of questions. So Fawad says that there is, he's overflowing with questions. So what I'll do is I'll pause here with my questions, and we take questions from the audience. And are you ready, Fawad? If you can flash a few of them so that our panelists could review and start answering them.
First, we will have another poll question. That will
yes, your poll, yeah.
Panelists a bit of a break. Can we have the second poll question for the audience? So the second poll question is, how can oil and gas organizations remain competitive and emerge stronger? Reskilling workforce, investment in technology, diversify into renewables. So this is a minute. Okay, so interesting. It is a very close tie. The participants feel investment in technology has got 50%, and diversify into renewables has got 48%. So I think it's pretty clear that the participants feel that investment in technology and diversify into renewables is the thing of the day. Thank you very much, panelists. I will now share my screen for the question answers. Mr. Yaqub sir. Yaqub sir, here we go.
Yeah.
Can you see the
Can't
first
we
question?
use hedging to overcome volatility risk in Pakistan with respect to oil sector? Did I read it? Because after Pakistan, it's not visible. I can see the W. So is it written with respect to oil sector?
Yes.
Yes.
Yeah. Okay. So Harun, you said in the beginning you've done your MBA from LUMS. So
Please, sir.
how about giving it a shot? I also got this question asked. Some people from the ministry called me also about this thing, but I let my comment be at ease. Harun, let's hear you out.
Sir, I will give you a bit of a philosophic answer, then give you a past story, and between the two, hopefully you will get the answer. So first, I will quote you something from Sadi, which I read in my BA Persian book, and I still remember. Mayam ke manim tum as khak damidam didam tapidam nadidam tapidam ojayan arsidam. Which means कि माना कि हम भी तुम्हारी तरह मिट्टी के बने हुए हैं, मगर हमने देखा हम तड़पे, हमने ना देखा हम तड़पे, और हमें नहीं समझ आई कहाँ जाए. So why do I say that? The problem with this hedging is I used to sell hedging to aviation customers globally in Shell long time ago. And one of my customers, he said, Harun Saab, we buy these hedges from you, but at the end we always lose out. I said, why? He said, when the hedge is in the money, our board accuses us that you were so silly, you had this instrument, you did not buy enough of it. When the hedge is out of the money, our board accuses us, you silly men and women, you went out and you bought this hedge, and now you have gotten us into trouble. You have bought more expensive oil. So there, I think, lies your answer.
I purposely did not ask this from Shahryar because, as you said, my board, he would have said some other institution. Because had he gone right,
I have an answer to that. I think just on the hedging, just on the hedging, and there's been some significant talk of this over the last 3 or 4 months as prices dipped, I think for Pakistan and the way our governance and regulatory system is set up, probably the best way to hedge is, again, invest in storages and buy cheap product and keep it for long. Financial hedging or hedging Brent, through financial institutions is we, I don't think the country has any kind of a skill set in doing that. Also, given the sort of questions and answers afterwards, as Harun is mentioning, whether from the boards or whether from other institutions, would be very difficult to answer. So the best way to do it is to, when it's low and we have storages, we buy cheaper product and use that. So probably a physical hedge would be better than, financial hedge.
Okay, Harun, you've been identified in this question also. When will Shell Pakistan introduce environment-friendly Euro 5 fuel, and how it will impact your current infrastructure?
So we already environmental friendly Euro 5 fuel. Local fuels obviously is the specification produced by the refineries. It doesn't really impact our infrastructure very much because we kind of mix what we get and bring it to the customers. Currently, what Shell, PSO, and everyone else is importing is making a difference. Is that enough for the environment, for everything else that needs to happen? Not really, but it's a great step forward. So this time I give you a simpler answer.
Yeah, thank you. Adil Saab, I'll let you handle this question from Imran Zafar. Is there going to be a resurgence in the oil industry somewhere down the line? Or is there going to be a major shift to electrical, cars, which may kill the oil demand worldwide? If the market for oil goes down, then the entire Gulf region almost becomes bankrupt. So it gives me a feeling that Imran works in the Gulf somewhere. But anyway, let's hear you out.
Yes, Mayor, I think we have already given our opinion, I think, all the panelists on this issue, like how long it's going to take. I think
It was the first poll question. जो पहला question था poll का, उसमें आया था कि कितने time period में recover होगा. But now Imran Zafar wants a panelist opinion. Yeah.
There are two aspects to it. एक तो after post-COVID, the normal demand कब आएगी? तो वो तो, you know, the majority who had responded to your opinion poll was like a year or so. So I would tend to agree with that. लेकिन दूसरा part इसका square का है, like electric vehicles की बात है. So there, I think it's going to take quite some time, at least in Pakistan, maybe 15 years plus, to totally displace fossil fuels. This is going to take longer, maybe 15, 20, or maybe even more. So I don't know whether I've answered this question or not.
Shariar, can you address the next one from Naveed Arshad? Presently, most of the technology in Pakistan is imported. How much risk the OMCs are willing to put in indigenous research and development for creating a new technology-driven energy company?
I think that what we have to recognize is that the industry, the particular industry we are in, is basically a commodity. So we are primarily distributors of a relatively inelastic commodity. In terms of bringing technology in, particularly in the downstream area, I think the technology can help improve a lot of our processes and bring efficiencies internally into the within the OMCs. At this point, I mean, even if I look at developed markets, for the average consumer, the impact of technology in the petroleum sector, you know, when I go to a gas station here in Canada to fill up, the experience pretty much is the same as when I go to Pakistan or anywhere to fill up. There's really no difference. I mean, other than the fact that I have to fill it up here myself and there somebody fills it up for me. So I know that there are some innovations in the filling. There is now, you know, a company in one of the Scandinavian countries where they've introduced this automatic nozzle where you drive up and through the app, you know, it'll fill your tank. But in terms of any game-changing technology in this sector, I don't know whether there's anything significant anywhere in the world that would be some kind of a step change. So again, in a developing country like Pakistan, with the kind of margin structures we have, I don't think the OMCs or even the refineries would be able to invest you know, any significant amounts in research and development.
Excellent.
At least in the short term.
Yeah, you have a point there. So, Mr. Adil Khattak, the next question is for you.
Can I add a sentence or two to the first
Yeah,
question?
sure. Please.
Our industry runs a very real danger producing the future steel mills.
Future what?
Steel mill of Pakistan.
Okay.
You know, it runs the danger of producing skeletons that will be a liability. And the only way around it is to invest in technology, to understand that there is an energy transition going on in the world, to constantly ask ourselves, how do we play the energy transition, realizing that the transition may well not be driven by Pakistan. देखिए पाकिस्तान ने गाड़ी इन्वेंट नहीं की थी मगर गाड़ी इधर चलती है. पाकिस्तान नेवर इन्वेंटेड मोटरसाइकिल मगर इधर मोटरसाइकिल चलता है. पाकिस्तान ने सोलर टेक्नोलॉजी में ₹1 नहीं खर्चा हुआ लेकिन इधर सोलर सेल हैं. हमारी इंडस्ट्री में ट्रांजिशन आ रहा है. इट इज देयर. For every single company in this country who is operating in this industry, that's an existential question we need to ask ourselves. What is our role in the transition? Because sooner or later it will hit us. Technology will change things. PTCL, when I was growing up, used to be the most profitable department of the government of Pakistan. Today there are problems.
Yeah.
So, you know, we need to, it's an existential question that you asked us. Answer क्या है ये हमें नहीं पता. But to say कि इसको हम ignore कर देंगे और कुछ नहीं होगा is naive.
Yeah, like for example, motorcycle is like 50% or 50% plus of your customers now in the gasoline area. And motorcycles, if you look at in China, are almost all on battery.
Electric.
So if motorcycles convert on battery, then it's a major business risk that the OMCs have if they convert into battery.
And the refineries have, and the industry has, and it's also a fabulous opportunity because the world is full of exciting new ideas. You have to play the change.
Yeah. Exactly.
Ignoring the change is the problem.
Mm-hmm. So Adil Khatak Saab, the next one is for you about the furnace oil. You briefly mentioned about furnace oil and what the refineries are planning to do. So the gentleman, Abdullah Umar, wants to know, in this coming winter, what do you plan to do?
Yeah, I think it's a very relevant question. And as I mentioned, it's a big challenge to the refineries as well. You see, what happens in Pakistan is that in summers, the electricity demand crosses, I mean, this is in addition to Karachi. If you leave out Karachi in the national grid, it crosses 22,000 megawatt. In winters, it comes down to almost 7,000 megawatt. So there's a big seasonal variation. And major consumer of furnace oil in Pakistan is, and used to be at least, the power plants, which was running on furnace oil. So when the government decided to shut down furnace oil or reduce production on furnace oil of electricity, this challenge was, we are facing this challenge since for the last 3 years almost. So what would we do in winters? Again, you know, like only 2-3 months back, there was such a huge demand for furnace oil that it had to be imported as an emergency measure in spite of the previous ban by the government on import of furnace oil. So what options we have till such time that we upgrade our refineries or we set up a joint hydrocracker unit? What we requested the government was that at least for some interim period, they should allow the most efficient power plants or furnace oil to continue running, because our production is, total combined production is about 10,000 tons per day. So that in terms of megawatt means about 1,500 megawatt. So if the government could have allowed power plants up to 1,500 megawatt and the most efficient ones on the top of the merit list, they would have taken care of the furnace oil production of all the refineries combined. So till such time they don't do it, the option we are left with either to reduce our throughput to minimize our furnace oil production, or maybe some refineries can manage to export furnace oil, but that would be at a loss because again, even the furnace oil being used on ships is now, they are required to keep it, the sulfur content much lower than it used to be. So it is a big challenge.
Yeah. Right, Fawad, let's move on. Fawad, this question is more for the power sector. So we can address it when we go to the power sector webinar in the future. Now, this one says the government has allowed the adjustment of exchange losses and inventory losses in petroleum product prices, specifically in ex-refinery prices. What is the mechanism for this adjustment? Does it mean that OMCs and refineries will not have any exchange and inventory losses going forward? Now, Harun, would you like to address this?
So this is a double-edged sword. You will also not have any exchange gain.
Yeah.
So in the past, there have been times when the rupee has also gained.
Yeah.
So, you know, OMCs are allowed a very, very small margin, 2 rupees 80 pesos to be precise. You know, add in a 5 rupee loss and you have taken away 2 months of 3 months of margin. So it's a very important thing the government has allowed. And it does mean that gain and loss will be priced out.
Yeah, the question was on the mechanism, which is, I think, if you have incurred an inventory loss in this month, you will add it as a cost to the other month.
Yes, you will get it cost to the, perhaps even month after next when the cargoes are settled.
Actual payments are done and it's auditable and the papers are available, so you get the adjustment.
Then you will get it.
Yeah. Yes.
But also to the other point in this, the inventory losses have not been allowed by the government, only the exchange loss. So the question has 2 points. So no inventory losses have been allowed, so the companies will continue to bear those.
Yeah.
Yeah, inventory losses naturally. I don't think the government can help you out over there. You have to manage your inventory yourselves.
And in fairness, you get the inventory gain also. So look, you gain some, you lose some.
Exactly, yeah.
And that's part of life. That is risk we sign up to as oil marketing companies or as refineries. I think the key is, if you want reasonable environmental standards, if you want a reasonable standard of operation in your country, what is it that needs to be allowed as a margin? And I think the key there really is complete open market, but with extremely stringent standards. Standards that are properly enforced, understood, laws that are understood, one window operation for the industry, and very, very strong implementation from the regulator. That is the key.
Mm-hmm.
And then if you have a complete open market, you can control price through pre-SO, you can control price through 10 other means, but then you will get the right standard in the lowest possible cost. And that's very important.
Mm-hmm. The next one is from Mr. Alauddin Ahmed Khan regarding the quality of motor gasoline. He thinks it's not as good as what we get in Europe. Is it true? That's the question. So since it's a quality related question, and Adil Saab, you produce gasoline. So how would you comment on this?
Okay. As far as motor gasoline is concerned, actually the situation is not that bad as it is conceived. The perception is that probably only, I think, a few weeks back, the HDIP was asked to check the sulfur content in the motor gasoline produced by the local refineries. And the pleasant and surprising news for most were that we were already meeting Euro 5 requirement of sulfur content in motor gasoline. The only point which needs improvement is the addition of additives to improve our RON. Now, talking of RON, the current country requirement is 92 RON for imports. Actually, even Euro 5 requires the minimum is 91 RON. So to improve RON, currently the refineries are adding some additives, some metallic and some non-metallic additives. So we have to take care of that. And for that, as I mentioned earlier, we have to upgrade add some of our plants to enable us to produce a better quality of motor gasoline. So it's going to take some time. But as far as sulfur content, which is most harmful for human, not that bad, I would say. Thank you.
Okay, Harun, a question for you that regarding the recent change in price policy from month to fortnightly, considering the longer lead time required for refined oil import, how can OMCs manage and sustain with this new policy?
OMCs can, so let me put it the other way around. What does this do? What it does is the following. For the refineries, it makes it slightly more predictable in terms of their production schedule. Slightly, because end of the day, rather than the price changing after 30 days, it's changing after 15, but it makes it slightly easier for the refiners. For the OMCs, slightly better in terms of managing the risk, because it's a very volatile market. And you will see increased volatility in crude prices. When you kept it at a month at the same price, and in the middle of the month, the price fell, smuggled product started to seep in. You can keep that comment off the record, by the way. But therefore, for the OMCs, it makes it slightly better. Does it make it far more profitable or far less profitable? Actually not. It just makes it more stable. And that stability will help our industry. Therefore, I'm a huge proponent of this. Does it make it far more risky? No, it makes it more predictable.
Okay, OGRA has the requirement to maintain 20 days of storage of petroleum product. Does this requirement, in essence, do we need to increase the requirement further? What are the storage days requirement in the region? So, any views? I think Harun, you should continue. You should answer about the region. What's happening in the in the vicinity, and then we can take the first half from Sharia.
In the vicinity, there are hardly any such requirements.
There's
Companies
no
are required to keep their pumps wet. Laws are simple. We also, by the way, need to simplify our laws. The future you're looking at is a world clearly where, products and refined products are in surplus. Europe is going to see the highest, or it's predicted, predicted is the right word because no one can say for sure, it is predicted to have a relatively higher refining surplus. Many other projects are announced in construction. On the other hand, COVID has reduced demand, but also demand is not seen by most analysts to grow at the pace you were seeing in the 2010s. So there's a decade change, there's a decade shift. And what does that mean? That means product availability is not going to be a huge challenge. You just need to allow a reasonable framework for companies to price out the cost at which buying it and focus there rather than focusing on reserves. I would rather 20 days is fine. It's a good number, as good as any. If strategic reserves are needed, that is a separate debate and for the government, or companies can be paid to build them and they will build them. What is key is to realize we need, as a country, a much cleaner environment. We desperately need it. Costs are very high. We need good implementation structures. We need good governance, and we need to be able to implement all of that through our government in a reasonable way. Back to yourself, sir.
Excellent. Fawad has, interestingly, the same question in the poll. So if I recall right, Fawad. So why don't you have your poll question, the last one?
Last poll question, please. What level of strategic oil reserves should be kept by Pakistan? All participants are requested to please respond. Just before we move towards the closing, for everyone that any questions that we have not answered, we will be preparing a post-webinar paper. We will be capturing the comments of the learned speakers and also try to answer other questions which were left unanswered.
I think just if I may make a comment, Yaqub, on the 20 days.
Yeah.
I think the 20 days requirement is driven by two things. One is to encourage investment in infrastructure by the oil marketing companies and the refineries, I suppose. The second is obviously security of supply in the country, because we are import dependent and because of all the geopolitical situation in the region. The 20 days is a requirement for energy security as well. So I think well, I agree with Harun that there's no right answer whether it should be 20 or 10 or whatever. I think that the two driving factors for the 20 days were these two considerations.
Thank you. Thanks, Shahryar. And I know the amount of pressure the oil marketing companies go through, because it's monitored very closely as to who's keeping what level of inventory by OGRA. So good luck on that. And I think now we'll have to come to the close of our session. And just to recap, I think we touched upon almost everything that's connected to the OMCs and the refinery. And in brief, of course, because you need many hours to understand this complex business that Harun, Shahryar, and Adil Saab manage. And I know the amount of tension and sleepless nights it takes to work in this industry so that people comfortably get fuel all across the country. Now, the pricing, yes, we touched pricing. It was a major issue for the oil marketing companies, the announcement of price, the frequency, because of the major inventory losses, because of pricing that the industry was facing. So I think that was a good step that was taken for a fortnightly pricing. Adil Saab's comments were well taken regarding the major investments required and a lot of support required from the government to run the base business. Refineries in Pakistan are currently really struggling to run the existing refinery. What to talk of, investing into the future and getting more capacity increases and technology changes, which is very desperately required by Pakistan. OMCs have their challenges. Naturally, the COVID situation really taught all the OMCs a very, very major lesson, and I'm sure a lot of discussions are going on. So most of the things were touched upon. Hedging, yeah, there are issues over there. It's not that simple. If you go wrong and you are a public sector, you start getting call-up notices very quickly. So people have to operate between, a very thin line. So my big thank you to all the three speakers and the organizers. And now it's over to you. I think Khalid Rahman, you would now take it up. So it's 5:56.
Thank you very much, Yaqub. I'm glad that you mentioned 5:56. We have 4 minutes to go. That makes my life very easy in terms of just saying simple thank you to all of you. But I would not leave you so. I will not let
you can take your 4 minutes.
Scot-free. So I will add in 1 more minute if you allow. So thank you very much, Yaqub. Assalamu alaikum, ladies and gentlemen. A very good evening and thank you for your participation today. I personally found the discussions to be highly informative, and I'm certain that the viewers have also benefited from the discourse of the industry leaders in the oil marketing and refinery sector. It's a complex subject, and some of the things I could not understand, having worked in the oil and gas industry for the last 30 years. So I can understand that we need to have a more sort of detailed analysis of some of the topics that we had discussed, which were highly enlightening and very, very informative. And I agree with the view of our panelists that oil is nowhere going out. And I think it's, and I fully agree with the comment from Shehryar, that I think next 30, 40 years, I think we can easily survive as OMCs and oil refining companies. So at the outset, I would like to record my deepest gratitude to our panel members, Harun Rasheed, Adil Khattak, and Shehryar Umar. Shehryar, thank you very much for joining us from Toronto in the early hours and for sharing their valuable insights. I'm extremely grateful to Yaqub Sattar, our past president and a veteran of oil industry, for moderating today's session and for putting the whole webinar together. Thank you, Yaqub, once again. The PIB, the Professional Accountants of Business Committee of ICAP, has been hosting a series of webinars, and this was the 12th webinar in the serial. We have covered oil and gas, healthcare and pharmaceutical, financial services, power sector, FMCG and textiles. And today was oil marketing and refining. Hopefully going forward, we'll be introducing other business sector webinars. But for the time being, we've decided to give it a short break. The webinars were initiated to review the impact of COVID-19 on different business sectors and how the challenges are being addressed. One thing has emerged clearly, that digital transformation and innovation has become critical for business survival, while leadership, resilience, and focus on human resources are the key drivers to meet the challenges such as faced with COVID-19. At ICAP, we have a very highly committed team of volunteers from the PIB committee, duly supported by ICAP staff who have been organizing these webinars. I would particularly like to thank Fuad Aftab, who has been a very active member of our webinar task force and who was also the host of today's webinar. Also, other PIB members who you did not see but were hiding behind closed cameras. who have put in a lot of work are Mohammad Umair, Rauf Jan, Khalid Noor, Murtaza Feroz, Mohammad Shoaib, Naeem Ghori, Abdul Qadir, and also ICAP staff, Amber Anwar, Imran Hafiz, Adnan Usmani, Arsalan Rabbani, and Shanawaz Abro. I'm thankful to all of them for the dedicated efforts and for making this webinar serial a success. Now, briefly about the PIB Committee of ICAP. This committee exists to serve our membership working in business and industry, which is around 80% of the total membership of ICAP. The basic idea is to create a platform for the continuous training and development. And I'm extremely thankful to Yaqub. Yaqub, we have your presence, so I would like to acknowledge that that's all his brainchild. He initiated it, and we are just taking it forward. So Yaqub and Khalil are the two who have put in a lot of work. So I'm grateful to both of them to have set up this forum, which is working with an extremely dedicated and committed members of the PIB committee. The PIB committee has taken a number of initiatives, including holding of CFO conferences. This is a flagship program of the PIB committee. It's a yearly event with participation of over 2,000 to 3,000 audience. And it's a major event which is held at two locations, Karachi and one in North. And we look forward to our support from the industrial leaders to not only come forward in terms of speaking, but also in terms of sponsorships going forward. We have a National Finance Olympiad to test the skills and knowledge of our members, and it's a very, very tough competition. It's supported, it is co-sponsored by Unilever. So we have a very active industry pastor who is helping us in terms of building up a knowledge base amongst our members. To conclude, I would like to thank President ICAP, Khalil Sheikh, and the council members for the guidance, support, and encouragement. May Allah bless you all and keep you safe and healthy. Good night and Allah Hafiz. Pakistan Zindabad, Pakistan Paindabad. Thank you very much, everybody.
Thank you.
Thank you very much.
Thank you very much.
Bye-bye.
Bye-bye.
Thank you very much. Khuda Hafiz.
Thanks, everyone.